All right, so today we'll be talking about the Diocese of Lincoln's 401k plan and their investment options. We'll be covering some of the things that have happened, some of the changes that have happened over the last couple of years that may have made some changes to maybe your investments where they're in some different areas. And then at the end, I will get into our website and show you kind of some aspects of the website, maybe some helpful information, helpful areas for you in case you want to make some changes or just take a look at your account from time to time. So getting started, we always like to say and like to think that within a 401k plan, the investing strategies are fairly simple or can be. And, we're not asking anybody to pick individual stocks or anything, but we really kind of want to cover some of those two main areas and try to simplify that for everybody, just so maybe you have a little bit better understanding of where your money's at and possibly if you want to move it somewhere more aggressive or maybe somewhere a little bit safer. So within the Diocese 401k plan, we have two main investment options. Over on the left is where we can kind of build our own portfolio through different investment categories. And then over on the right, we have target retirement funds, or sometimes you might hear us refer to them as target date funds. And we'll again cover both of those two areas. So this here is what we refer to sometimes as a style box. This is where we build our own portfolio. Up in the top left, you can see we have three main categories: money market, bond funds, and stock funds. Money market and bonds are going to be considered more of your safer, more conservative investments. And really what you're looking at here is, we have a lower potential for return, maybe like the low, mid, single digit type returns sometimes. But we also don't have the big loss aspect as we might do with stocks. Bonds can go negative, but maybe on a yearly basis that negative percentage might be 1 to maybe 3%. We're not getting into the double digits like we could see within the stock market. So with bonds, again, you have that more conservative option there, lower rate of return, lower loss as well. The money market investment or mutual fund is going to be the most conservative investment that you have. This is where we always kind of refer to as like a savings account, essentially, where you're not going to have that negative rate of return, but you will have just a small positive rate of return year over year with that. So bonds, money markets, more so bonds, usually have a play within someone's investment portfolio when we're looking fundamentally at investing. The reason for that is typically in the past, when stocks go negative, bonds are usually positive. Or if bonds do go negative, it's ever so slightly, like I mentioned, maybe 0.5% or 1%, something like that. So to kind of keep your portfolio afloat a little bit if stocks are going negative. So that's why bonds are usually a portion of an investment portfolio when we look fundamentally on that. Going down to the stock mutual funds, you can see there again on the left, we have categories of large, medium, small, and international. Large, medium, small is what we refer to just as the size of the companies. Large cap is kind of what we talk about, or the term that's used. With large companies, where we're looking on the U.S. side, those are going to be your Amazons, your Apples, your Microsoft, your Disneys, those really recognizable companies. And then if we kind of move on the right of the screen with the arrow, you can kind of see if we start at the top with large U.S. companies, those are considered more the safer investments out of those four categories. And then the further down we go to international, the more aggressive we become. Now, maybe because we're getting more aggressive doesn't always mean we're getting a larger rate of return, but there are some dynamics in there that kind of make that more aggressive. Basically kind of meaning you might see more fluctuations within the rate of return from one year to the next. And again, fundamentally with investing, usually for diversification purposes, you would have money invested in all four of those categories. The reason for that being is all four of those categories are going to perform differently from one year to the next. not one category is consistently going to be at the top or the top two. So if we spread our money out within those different four categories, what we can do is we can actually kind of shrink that window of volatility. The kind of term or classification that I kind of try to use is, if we diversify and spread our money out, maybe we're not on that really big roller coaster. We're kind of in the medium-sized roller coaster. We're going to have some ups and downs, but we're not going to have the very big high peaks and the very low valleys. So we kind of shrink our portfolio fluctuation if we kind of spread our money out to the four different categories again. That's typically how investing is done fundamentally. And then for the diversification aspect, again, you might have money in all four of those stock fund areas. And then we might add some money market or bond categories to kind of help when the stock market goes negative. But this is definitely going to be more the hands-on approach of building your own portfolio. So building your own portfolio might be for those that maybe understand the basics of investing a little bit. Maybe you enjoy following the stock market, like knowing where your money's at, and that's what we refer to as asset allocation. What categories is your money at? Maybe you like knowing that. Maybe you like having some control over where your money is being invested, or maybe you know your risk tolerance. Risk tolerance is just really understanding how much risk am I willing to take for a certain amount of return. Most of the time, that's kind of found out when the stock market goes negative. We understand, okay, what am I really comfortable with losing? But if you kind of said yes to most of those areas, maybe then building your own portfolio is something that you would like to do. And again, part of my job is to kind of help you walk through that fundamentally, again, talk about those different areas, just so you have an idea how building that. So this is going to be, again, option one with your investments. The second option here are the Vanguard Target Retirement Funds, or target date funds as we refer to them as. And if you can see at the very bottom there of the slide, there's kind of 5 major categories that Vanguard invests in. And what Vanguard is doing is they're deciding for you where your money should be invested, how much money should be invested in each of those 5 categories, and they figure out your risk tolerance for you. They do that all based off of the year that you are looking to retire. So that's what the dates above the pie charts refer to. Those are your potential retirement years. And again, based off those years, or how many years we have left till there, Vanguard's going to basically create your investment portfolio for you. Any of the further away that we are from those investments, the more aggressive the portfolio is going to be, because the further away we are from our retirement year, typically the more aggressive you can become, the more risk you can take for the higher potential for return for that growth aspect. The closer we get to retirement, if you take a look at those colors, the more blue you see, so the more cooler colors, the more blue you see means the more conservative or a little bit more safer those investment portfolios are. The reason for that is typically, fundamentally, when we get closer to retirement, the more conservative we want to become with our portfolio. The reason being is if I'm, for example, 3 years away from retirement, I may not have enough time to ride out a downturn in the stock market and then wait for it to recover. So I can't afford to lose 20, 25, 30% of my portfolio or my account because I don't have enough time to ride that back up to get back to where it was. So to do that, I want to be a little bit more conservative with my investments, where I add more bonds and decrease my stock exposure. One really nice thing about the target date funds are that they adjust your portfolio every year to become more conservative. Again, the reason being I'm 1 year close to retirement, so I should probably get a little bit more conservative. So the target date funds do that automatically for me every year. So for the target date funds, a couple questions to consider. Maybe if this is the area that you'd like to go to, maybe if you think the investment process is just a little too confusing just not for you. Maybe you like to eliminate some of the research that goes into maybe choosing how to create your investment portfolio. Maybe you don't understand or follow the stock market all that much, and maybe you don't know how much risk you should be taking based off of your age or how many years you might have left till retirement. And or if you just really kind of want to have professionals decide your investment mixture. Again, if you said maybe yes to most of these questions, maybe the target date funds are the option for you to go with. One really nice thing about the 401k plan with the Diocese is you can trade in and out of these funds fairly frequently. So if you're in something today, you can trade out of it next week and then say maybe next month go back to where you were or back into something else. So you're going to have a lot of flexibility within the investment options that you have. And I always tell people one investment strategy, whether you're handpicking or doing a target date fund, one is not necessarily better than the other. It just really comes down to whether you're comfortable creating your own or if you just want someone else to do that, and that's what the target date funds will do for you. So I want to get now into a couple changes that have happened in the past to the 401k plan that may have impacted where your money is being invested. So just to recap for everybody, prior to July of 2018, the only investments available were those in the style box or those where you create your own portfolio. And again, prior to 2018, the only contributions that were going into the 401k plan were from your paycheck, your own personal contributions. And again, the only investments options you had were to choose between individual categories, basically creating your own portfolio. That was the only option available to you prior to July 2018. And starting in July of 2018, matching and non-elective contributions were now being added to the 401k plan. Prior to, those non-elective contributions were being sent over to Emeritus. Now those, starting in July, were being all sent to UBT and added to your 401k plan. When that money was being added to your account and any future matching or non-elective dollars since then, all of that money was put into a target retirement fund, and it went into the one that closely matched the year that you would turn 65. That's where that money started to go. And then most recently for everybody, starting in April of 2019, merged money pension plan from Emeritus was brought over to Union Bank. So all of the money that was at Emeritus all those prior years was brought over, and when it came over, that money was invested in the same funds that you selected for your personal contributions. So again, my personal contributions were maybe in those individual categories, and so when the merged money pension plan came over, that also got put into those individual categories. It did not go to the target date funds. So just going to show you a little example here to maybe kind of put this in perspective and give you a little bit better picture of what may have happened and kind of why we're doing this presentation today. So, for example, maybe I was hired at the Diocese in 2010, and again, in 2010 I only had the individual categories to choose from. So I chose the 5 categories here, and up at the top I put 20% in bonds, which means I have 80% in the stock market. Again, only personal contributions were added, so that's where all my money was going for a number of years. And then starting in July of 2018, I started receiving matching and non-elective contributions. Again, when those came in, at the time in 2018, my potential year where I was going to turn 65 was closest to 2025, so that's the target date fund I went into. And then in April of 2019, money that I had with Emeritus came over to Union Bank, and as you can see, that money again went to those 5 individual categories that I chose back in 2010. So as you can see, I have personal contributions, merged money pension plan going one area, and then I have matching and non-elective dollars go into another area. So that target date fund, when we take a look at the stock to bond mixture, as of right now, there would be about 40% in bonds and 60% stocks. That's where Vanguard would tell me my risk level should be at. But my personal money and my money from Emeritus is not split up that way. It's actually more aggressive. I have 80% stocks and only 20% bonds. So as you can see, by having money in a couple different areas, maybe my investments are more aggressive than maybe what they should be, or maybe what I'm comfortable with this time at my age and how close I am to retirement. So this is one reason why we really want people to take a look at their quarterly statements, whether they get them, in the mail or just go to your account online to review where is your money at. Is it going to different places? Is it invested the same way? How much risk am I taking on based off of my age? Just with this scenario, again, I may be more aggressive than maybe what I'm really comfortable with. And I would say, typically there's not a real good reason to have money invested in kind of two different spots. I've created my own portfolio from my personal contributions and merge money pension plan, but also got another pre-made investment portfolio with my matching and non-elective dollars. I could be duplicating the same process, so there may not be a reason to have those two different areas. I could simplify it by maybe going all to a target date fund. But again, there's really not a real good reason to maybe have my matching dollars invested differently than my personal dollars. Most of the time, people are going to have those invested the same way or in the same investments. You can have them split up. We just always want people to know maybe the additional risk that they might be taking on by having those two different categories. But again, most of the time you'd probably have, no matter where the money comes from, have all that go into the same spot. So again, just kind of want everybody to really take a look at their investments and kind of see, if they're split up differently. So I'm just going to end the presentation on the slideshow there. And I'm going to get into our test account and just show everybody a little bit about what the website would look like on your end. And again, maybe some helpful areas. So when you log in, you can kind of see some different things. But this is pretty much what your account is going to look like. The dashboard is considered kind of the main page. Over on the left, you have this track retirement tool. What this tool is really trying to do is help let you know what type of monthly income you might have in retirement based off of your account balance with the diocese. The number that you see, I always tell people, is not going to be accurate unless you go through the tool. One nice thing about it is you can add in outside assets, maybe a spouse 401k, IRAs, those sorts of things. You can include Social Security benefits as well. But again, it's trying to be a nice, helpful tool, just to let you know maybe what type of income you might be able to get in retirement. But again, that number on there is not going to be accurate unless you go through. Under the account balance, obviously you'll see your number there. Over on the right is the contribution rates. Currently, right now, you will not see that particular tile. We are talking with the diocese of potentially adding that sometime in the future. So, hopefully sometime in the future that tile will be there, where you'll be able to change how much you're contributing to your retirement account by making that change online instead of having to fill out a paper form. So that might be coming sometime in the future. If we go down on the main page, the My Portfolio area is really going to tell you a lot about your account. What you're going to see within this area are the investments that you're solely in, the investments where you have money going. You'll have the name of the investments. You'll have the performance here. The one thing I always tell people when they take a look at the performance, that is a 1-year performance. It's not a year to date or last month or anything like that. It's 1 year. So always be cautious of that. The From My Paycheck, this lets you know money that's coming from your paycheck, where is that going to? And then, of course, the balance. Um, so this balance area, or these two areas, are going to be really helpful into knowing, if you have money going to multiple areas. Um, for example, if this was, say, a target date fund, 100% of my money from my paychecks go into a target date fund, but I have money in different investments. Again, that's going to tell me, do I have money going to the right place? Where is that money at? Those sorts of things. So that's a kind of a nice tell there. And this is all under the overview view. If we go in the drop-down box, we could take a look at source view. Source view is just really kind of what we refer to as buckets of money. So you have basically your 401k, employer match. For you would see employer non-elective. Then you'd see, again, your Roth 401k dollars as well. If you click on it, again, it'll show you, okay, so from my personal 401k, these are the investments where my 401k dollars are going. I could also look under the match and see, do the investments under the match category match where my personal dollars are going? And if not, again, maybe there's a change that I might want to make there. So that's kind of a good helpful area as well. And then again, as a performance one, again, this is only going to show you the performance of the investments that you're in, but it does go from 1 month all the way out to 10 years. We always tell people, if you're looking at performance, usually take a look at the 5 and 10 year, possibly the 3 year. Anything less than 3 years is probably not going to give you a real good indication of how the fund is performing. Taking a look at the year to date, the 3 month or the 1 month is not going to let you know how that fund's going to perform in the future. Typically, you want to take a look at the 5 and 10 year, kind of get a better idea of how it might perform over the long term and through different market cycles there. So we always tell people not to get too caught up in the short-term rates of return that you might see. So going back to the top, a few things I want to show under forms and reports, under the e-statements area. This is where you can create a custom quarterly reports or for any time frame. And then we always do keep past quarterly statements online as well. One thing I always talk about with people getting online, feel free to move around. If you're going to make changes to your investments or move money around, you're going to probably go through 2, 3, 4, 5 steps to be able to get that accomplished. And so you'll definitely know if you're making some changes, or you'll have definitely time to stop. So you're not going to make a change by clicking on just one thing or two things. It's going to be multiple steps that you're going to have to go through there. Under the performance tab, you have your personal rate of return. Fairly simple there. You can look at it on a monthly, quarterly, annual basis, or maybe create your own custom time frame to see what your rate of return is. Under the investment information, you can find out a little bit more about the investments. This is where, under the investment returns areas, where you can take a look at all the investments, all of their rates of return over multiple periods of time. So instead of just showing you what you're in, you can take a look at everything under this area here. And under the Manage tab, Manage Investments is probably where most individuals go. This is really where we're kind of, again, managing the money that we have in our account. Move money and change elections are the two most popular that people use if they don't have the change contributions to do online. But under the move money, as you can see, it says transfer the money in your account between the funds in your plan. So move money only deals with the money you have today. It does not deal with money that might come in the future, only money today. I always refer to the move money area when I talk to individuals as it's kind of like moving money in between my checking and savings account. That's basically what I'm doing. Again, just moving the money that I have today in between different investments. Change elections is where we're going to change the investments my money goes to. And I would say, 7 out of 10 times or more, this is where we go to change the election. So I'm just going to get into it here real quick. As you can see, there's this progress bar up here. Again, if you're making any changes, you want to make sure that says 100%. That means it actually went through and you get a confirmation number. Right off the top, you're going to get kind of two selections here. 99 out of 100 times, you're probably going to click the All Sources button. Again, going back to, I'm putting money into it, say in my 401k, doing pre-tax dollars. I have matching and non-elective dollars coming in. Again, most of the time, we would probably have all those invested in the same area. And so to kind of really simplify the process, I'm going to do all sources. No matter where the money comes from, I want it going to these investments. And so if we click that and we just go down on the page, you're going to find all the investments that are available for you. Going back to the example that we had on the PowerPoint, where I had money in individual categories and then also a target date fund. For example, if I wanted all of my money to go to the target date fund of 2025, I would just find it on the list, and over on the far right, I'd put 100% under the new election column. This is telling me and telling us at Union Bank, going forward, I want all elections to go to the target date fund of 2025. Then if you click on next, there's just going to be a couple additional steps that'll help you walk through to kind of complete that. But again, change elections is where you're going to be able to change money and where you have that invested. Also through this spot, you can also have all of your current money go, say, to this target date fund as well, or wherever you want it to go. So I'm just going to cancel out of that. And then the last thing I just want to mention to everybody, up in the very top right, there's this gear symbol up here. If you click on it, is where you can look at your personal information, change any of that, maybe change your password, whatever you like. But you're going to also see this beneficiaries area. So if you click on beneficiaries, this is where you can add, change, delete, whatever you'd like to do. We've added a spot for you to put your beneficiaries online through your account. So instead of having to maybe fill out a new paper form, you can change your beneficiary designation right here online. I always tell people there's not a whole lot of information that you need. Really the only two main areas are the percent, how much is the beneficiary going to receive, and their name. Those are really kind of the only two aspects of it. Social Security number is here, but as you can see, it's optional. I always tell people the more information, the better for us identifying somebody. But again, you can update your beneficiaries at any time right here online. You have your primary, contingency, which would be your kind of second in line. If you've already filled out a paper form, that beneficiary designation will not be uploaded into the system unless you go in and you put that in yourself. So if you filled out a beneficiary form 5 years ago, you can go online and input that same information right here, and this will kind of supersede the old paperwork there. So just kind of let everybody know this is definitely available to you. It's online. You can update it whenever you would like. It's already there for you. Going back to the main dashboard, again, hopefully we might be adding the contribution rates here sometime in the future. If you are curious as far as how much you are contributing, we can't see that online. So if you want to kind of know that, you just have to go to the person that handles your payroll and ask them what that percentage is. But again, hopefully maybe sometime in the future we'll be able to get that online so you can kind of see that and make any changes at that time. So, well, with that, I'm going to end the presentation.